Wednesday, June 1st, 2022, Monaco 64, home of alternative economics and contrarian views. Today, my mission or promise to you is to show you how Uncle Sam is actually skimming over $1 trillion from investors this year. Yes, it's a snapshot. It's not something that happens all the time. It could be more than $1 trillion sometimes and less other times, and you will understand why. Before I start, though, I like to say to those of you who have just clicked onto this video, who have never watched any of my videos or haven't subscribed to my channel, I recommend you go onto my YouTube channel itself, look at all the content I upload or have uploaded over the years, all the playlists that I have. Yes, and think about subscribing to my channel and hitting that little notification bell to be notified of all my new videos. So before we go into the numbers and how I've worked this out, and anyone can work this out, I'm going to put a link to the all the websites that you need to keep track of this. I like to say that this applies to all the major Western countries. It's not just Uncle Sam or the US Treasury who are confiscating, really. In the 70s, they used to call US Treasury securities certificates of confiscation, and it's happening now again. They're confiscating basically your wealth and your income, and that's how fiat money inflation works. And yes, my objective here is to show you that if you keep investing in Treasury securities, it's akin to allowing a burglar to just come into your house and take things. The other analogy I would give is if Uncle Henry, for example, who's a very wealthy man, let's say, is turning 80. He's got hundreds of friends, hundreds of family members. He's had a really successful life. He's got a huge estate, and he's giving a huge birthday bash for his 80th, and he's got like a parking lot in on his estate, and all the guests arrive. He's got a valet parking all the cars, keeping the keys, and the party goes on for a couple of days. And while the party's going on, the valets are siphoning off gas or petrol from everyone's cars, even the family members, friends, everyone. They don't siphon off the whole tank, but they do a third or a quarter, and everyone, after a few days of partying, they get back to their cars. They don't notice, and they think of Uncle Henry as a respectable individual who's done really well, has a huge estate, and that's what's happening here with Uncle Sam. And who's the valet? I would say the valet is the Federal Reserve, and we'll see why. So the other thing I would say, this is all part of what's called financial repression. And what's financial repression? Well, it happened after World War II when the US, the UK, for example, racked up huge debts. They had to inflate those debts away, and that's how they did it. And they banned people, of course, from acquiring assets that would help them protect their wealth, like gold. In the US, you couldn't buy gold until 1975. In the UK, in the late 60s, they put a limit to how much gold you could buy. And we're going to come to gold in a minute. But now to the numbers and how I work this out. So it's very simple. Go to the description. I've got all the websites that you need to work this out. So the first number we need to look at is the debt held by the public ex the Federal Reserve. And it's interesting that they bunch the Federal Reserve together with the public. The rest of the debt is held by intergovernmental agencies. So this is a proof here that the Federal Reserve is not really a government agency, because they should bunch it up with the intergovernmental agencies. Of course, the public debt right now, you might think, oh, 18.2 trillion, that's a lot less than the 30 trillion. Yeah, because the 30.5 trillion or so, that's the debt held by the public and all the government agencies, the Federal Reserve. If you take the intergovernmental agencies that hold government debt, you get down to 23.9 trillion. And then if you take how many, in terms of treasuries, the Federal Reserve holds, it's about 5.7. So that's how I get to this 18.2 trillion. And then the average interest rate paid by the Treasury as of April, end of April, was 1.528%. That's why I said this is a snapshot. This will change with time and with rates. And then we have to look at the CPI, the Consumer Price Index, which I would say is heavily doctored. The methodology through which they calculate this has been changed many times. And a lot of you know about shadowstats.com and John Williams. According to him, we should be more around 15 or 17% if you calculate the CPI, how they did it in 1980. So I would argue that this confiscation from investors has been going on for much longer, because I think the CPI has been underestimated, and now it's gotten so bad that they can't even like hide it through this kind of phony CPI, right? But anyway, as of the end of April, it was 8.3%. So now we can calculate the real average return on Treasury securities, and that's minus 6.772% at the end of April. Again, it's a snapshot. So very easy to calculate the loss for investors. Well, it's 6.772%, a negative return, of course, on 18.207 trillion, or just over $1.232 trillion. And if you add the Federal Reserve, it's almost, well, it's just over 1.6 trillion. The Federal Reserve, though, doesn't care. The Federal Reserve is not really an investor. It's a hybrid, private, governmental institution that has the monopoly power and the legal power to basically create reserves out of thin air. So I don't consider them an investor. So there you have it. And any other fixed income security or bond that is not Treasury, a US Treasury, if they're returning less than 8.3%, you're basically losing out as well. And that's how the inflation tax works, and that's how financial repression works. So my objective here is to show you, or to have shown you, that by financing Uncle Sam or the US Treasury or the US government, you're basically being ripped off. They're siphoning that gas or petrol from the tank of your car. And the other thing as well, you're financing irresponsible spending in DC. You're financing foreign wars. You're financing the deep state. So yes, if you are not happy with how things are going in DC, I mean, it's more important than ever that you make sure that you have no exposure to US Treasuries, be it your direct investments, your 401ks, or even if you are in any way, shape, or form related to a pension plan where you have fiduciary agents who are investing those funds, or even foundations, if they're investing in U.S. Treasuries, you're actually being robbed by the U.S. Treasury, by Uncle Sam, and even by other corporations. And how does the Fed, how come the Fed is the valet here? Well, because the Fed, with their power to create reserves out of thin air, they do what's called QE, or asset purchases, and they've been buying, as you've seen, they've got almost 6 trillion of treasuries. And what does that do? Well, that keeps the yield and the interest on treasuries low, and that's how the Fed is the valet, and Wall Street is the same. Wall Street is an instrument of the Fed, or vice versa, if you want to look at it like that as well. And they have this silly notion of the break-even rate of inflation, the expected rate of inflation. They're telling us now that yields on the treasuries are low because we expect inflation to be at 2% in 2 years. But in the meantime, you're being fleeced of 6.772% of your income. So there you go. What's the solution? The solution is to park your money or your savings elsewhere. And here's where we come to gold, because gold should protect you from this. Under a gold standard, for example, if government starts abusing its spending power, people will take their gold out of the banks. But under the current system, the way this is reflected is through the gold price. And yes, what they're doing now by controlling the price, it's not even that they can suppress it forever. By controlling it, making it frustrating for investors, they keep them off gold, and that's part of the repression. And that's why I don't think they're going to confiscate gold or silver, because there's so many people out there who don't believe gold or silver are any good against financial repression, and that's what they want. But if you look at this data here from Incrementum AG in Liechtenstein, they do this report every year, In Gold We Trust. Look at the performance of gold since the year 2000 in various currencies. Well, in US dollars, you've had a 9.3 average annual return on your gold since 2000. So you're not going to hear about this on CNBC or Bloomberg News or from any financial advisor. And the way they keep people from looking at this is through making gold and silver very volatile, and it discourages people from acquiring physical gold and silver. But I would say that they can't keep gold and silver from appreciating over the long term, because it's such an important part of the banking system. Why would central banks hold gold if it wasn't, right? Well, with the exception of the Bank of Canada. So there you go. Hopefully, I've convinced you that it's a mug's game to park your funds in US Treasuries or even UK gilts or German government bonds. I mean, look at Germany. You got CPI at 8%, and I think the Bund is yielding just over 1%. It's everywhere. Everywhere investors are being fleeced. So we're back to the old certificates of confiscation. And don't believe what economists that work on Wall Street, City of London or Frankfurt tell you. Yes, that the break-even rate is 2%. So actually we've got a positive return now. Real yields are going positive again. Well, if real yields are going positive, how come investors are losing so much? That is just pure propaganda and deception, I would say. So today I'm going to end right here. See how it goes. I'm not going to do a market report. Maybe some of you will miss it. Maybe some won't. Let me know in the comment section. If a lot of you still want the market report, I will do it again, or maybe do a market report when the markets move a lot. Yeah, to make it more interesting. So think about subscribing to the channel, and have a great day. Take care. Bye.